Next week, we'll bring big tech earnings from the likes of Amazon, Facebook, Netflix, and Apple. I'm here with Jim Cramer. Jim, as we're seeing a rotation out of these sorts of names into more value stocks, what do you think we can expect from these earnings? Will Google set the tone for these reports?
Well, let's talk about Google for a second. It's an actual Earth's name. Stock ran up 16, comes back down 26, probably gives up to maybe 30, maybe 35. And then you want to buy it because in the end, Google becomes a value stock there. I mean, it's growing at 19%. It'll be selling at 17 times next year's earnings, so it should fit the paradigm. Mm-hmm. You know, Coca-Cola has 1/3 of the growth rate, and it sells at that multiple. So I think that what you're going to see is things are in flux. Apple, if it comes down below 500, is a value stock. So we may hate it here, we may like it down there. We meaning these people who come in and set the prices. The difficult one is, will Facebook produce such an outsized revenue and earnings number that it breaks out of this vortex of either value or growth? So in other words, let's say Facebook reports a number that tells you in 2016 it's a value stock. That's how Google got from 100 to 500. So that's what you need to see Facebook. So Apple might be undervalued. Lower. Google will be undervalued. It takes a couple weeks for people to realize, you know what, I don't really care that they missed Jordan Rohan's model, and I like Jordan very much. What I care about is the fact that it's just a cheap stock. That's what happened with Apple in the 400s. They get cheap, and then people come back. IBM in the 170s, 180s, it's cheap. And people want to have value, but they'll find value. They're looking for, actually, this is the oddest thing, they're looking for the next SanDisk. They're looking for the next Western Digital, looking for the next Seagate. And those became single multiple stocks that put on good numbers. I don't think Google and Apple are ever going to hit those levels. But then on the other side is Netflix and Amazon, and there you need to see sales reacceleration. There's some good notes out today saying that Netflix might do that. Amazon's a very tough call, Brittany, because Amazon, Netflix, Tesla, SolarCity, they test your judgment. Because if there really is a move out of growth into value, then those just can't work. So we need to see, it's interesting because McDonald's reports next week, that's ultimate value stock. We need to see McDonald's down. We need to see Con Ed, who's on Mad Money tonight. We need to see that down. We need to see those stocks down before we can get a roar in an Amazon, Netflix. As long as you see the real estate investment trusts and the utilities going higher, along with McDonald's and Coca-Cola going higher, then Netflix and Amazon, you can't own them.
Interesting to see some of these names turn into value stocks. And you recently purchased Apple for your charitable trust portfolio.
It's just
is that right?
too cheap. I mean, one of the things that I think you have to wrestle with is it too cheap and you hate it? I mean, for instance, IBM I don't like, but it's so cheap, we're buying for the trust. And you can say, well, Jim, that's foolish. But IBM has a data point, which is the second half, there's new products. And that's historically been really great for IBM. So all I'm doing is anticipating a cycle. Not unlike Caterpillar. Like Caterpillar at 85, nothing was good. It goes to 103. So, I mean, if you have a catalyst, if something's about to occur, and I think the iPhone 6 and the larger form factor, 5-inch, maybe almost 6, I think Apple unveils those products. And if they do, then we have growth in the second half, and then people buy it.
And so for this group we have coming up next week, your favorites then to look at are Apple and Facebook.
Yeah, definitely. And I think that, look, I'm nervous about Facebook. Could you say, well, Jim, we should have sold Google for Action Alert? I can't find a cheaper stock than Google that has good growth. So I'm willing to take today's pain, knowing that it was up 15 yesterday, gives back half of that. Maybe Monday, Tuesday, it settles. And then people look at it and say, wow, I can get this kind of growth for this kind of multiple, I'll buy it. Even if the analysts don't like it that much, betting that they're going to get it right. And they will get it right.
All right, well, you heard it. That's Jim Cramer. I'm Brittany Umar for The Street.